Hello all, welcome to my channel. My name is Mrs. Prajakta Bapat. In this video, we are going to discuss what is cost, what is the basic difference between fixed cost and variable cost, and what is marginal cost statement. We will also discuss on how to prepare marginal cost statement. So let us first understand what is cost. Cost meaning any amount incurred for producing any product. So right from procuring raw material till selling of that particular product, whatever costs are involved during this process are part of your total cost. Now, how to divide this cost into fixed and variable? Because every cost has its own characteristic, every cost has its own nature. So, how to determine whether this is fixed cost, variable cost, semi-variable, or semi-fixed cost? So, for example, now raw material. Raw material is a cost which is incurred for producing producing finished goods. Now, fixed cost is a cost which remains fixed over a time period, as the name suggests. And variable cost is the cost which varies accordingly. Now, we were discussing the example of raw material. Now, raw material is required to produce finished goods. So, if I am not producing any finished goods, for example, during COVID times, every shops were closed. So, there was no production in the factory. So, if there is no production in the factory, raw material is not at all required because it will not be of any use. So such costs which depends upon or which varies depending upon the capacity, which depending upon the production capacity, that costs are considered as a variable cost. So the way we did not require raw material for producing product because we were not producing any product, so we did not require raw material. Same way you will not require the laborers also to work. So you will not paying them wages, right? So that is also a variable cost. So basically variable cost, the characteristic of variable cost is it varies according to the production capacity. So if the production increases, your variable cost will increase and vice versa. Now, what about whether it remains same per unit or it remains same in total? So, normally variable cost remains same per unit because, for example, raw material. Suppose you require a raw material of 10 rupees in order to produce one unit of finished goods. So, that 10 rupees will remain same though you are producing one unit, or that 10 rupees will remain same though you produce 1000 units. So variable cost remains the same per unit. Now let us discuss about the fixed cost. Fixed cost meaning the cost which remains fixed over a period of time. So for example, rent. Now during COVID times, there was no production in the factory, but if the factory is a rent out place, then we have to pay the rent. We are supposed to pay the rent though we are not using that space because it is a fixed cost. Same way, it does not get changed according to the production capacity. If the rent is as per the rent agreement, if rent is decided as a 1 lakh rupees, then it will not get changed because of any other reason. No owner will say that your production capacity of your factory is more, so pay more amount. That will not happen. That will remain same irrespective of any other thing. That is called as fixed cost. And combination of both is semi variable, or it is also called as semi fixed because uh, it is combination of both. It has both the things. It has characteristics of fixed cost also and variable cost also. So the best example is telephone bill, landline telephone bill. So landline bill is basically it consists of, or electricity bill also, it consists of certain fixed amount which is like a rental charge to the telephone or to the telephone device or to the electric meter. So that is the fixed amount, and above that fixed amount, so for example 200 or 300 is the fixed amount, and above that whatever is the usage of electricity or telephone calls, that will get changed. So that amount which remains fixed is fixed cost. It's a factor of fixed cost, and the amount which gets changed according to the usage is considered as a variable cost. So that is the basic difference between fixed and variable cost. Now, let us understand what is marginal cost. Now, marginal cost meaning, first of all, understand the concept of marginal. Marginal is additional or incremental. So, it is a marginal cost. The characteristic of this marginal cost is variable cost. Okay, it is a variable cost. So, what is marginal cost? Now, suppose I am producing 1 lakh units in a month. Okay, I'm producing any product. Take any product, you are producing 1 lakh units finished goods of a product. Now you have certain amount of fixed cost for that and you are spending certain amount of variable cost also. Now over and above, if I decided in a particular month that I will be producing 10,000 units more as there is more demand. Instead of 1 lakh, you will be producing 1 lakh 10,000 units. Now that above 10,000 units, that additional 10,000 units, for that you don't have to spend any fixed cost because fixed cost remains same, rent amount will remain same, but your variable cost will increase. You'll have to buy more raw material, you will have to pay more wages, and other expenses also have to be incurred additionally. So that cost, that additional variable cost which I am spending for additional units of production, additional units of finished goods, that is considered as a marginal cost. Now let us understand what is marginal cost statement and how to calculate the marginal cost statement. So there are three columns. First is particulars, then per unit, and then amount. So you will be showing basically the amounts per unit as well as in total. So first is sales. Now first you will be taking up the sales value will be given to you, or sales per unit will be given to you, and total number of units will be given to you. So per unit, what is your sales and what is the total sales? That you will write less variable cost. So you will not deduct all the costs at a time, you will deduct it level wise. So first variable cost will be deducted, sales minus variable cost, you will get contribution. Contribution is like a gross profit before deducting other cost. Before deducting fixed cost, this is the profit which you receive, contribution it is called as. So sales minus variable cost, you receive contribution, minus fixed cost, you receive profit. Okay, and this per unit column will be maintained only till contribution, because you will not calculate fixed cost per unit, it will be calculated in total itself. So this is the formula, or this is the statement which is prepared. Now when you calculate the further formulas or further concept when we will learn, for all those calculations we require this basic table. So as far as academics is concerned, when you have any question of marginal costing, first you need to prepare this marginal cost statement. Thank you.